Hello, everyone. Welcome back to the Prospero.ai stock market live streams. We have a lot of stories to get to today. Market opening up deep in the red this morning. The April 2nd tariff fears are having a stronghold on the markets, but it's trying to fight back a little bit after that very red open. So we have the QQQ now down 1.5% on the day. The SPY down 0.7%. The Dow Jones is actually green now, so the markets are fighting back, and the Russell just down over 1%. So the markets are mixed. We'll see what happens throughout the day. Um, Probably also worth noting that Bitcoin is now up 2.67%. We're going to talk about Bitcoin later in the stream more in detail, but it's not all red as of right now. So we'll have to get George in here to give us his thoughts on this April 2nd date that is now only 2 days away. So it's coming up on the market. Is it going to be a clearing event? I've seen some coverage about this date now being that investors are just excited to get it behind them and have some certainty on what's actually going to happen. And maybe it could give a little reprieve, just the fact that it's actually happened, occurred, and is set in stone once this date, once we pass this date. We have to talk about some things we covered in the Sunday newsletter. The lowest readings ever we've seen combined for the SPY and QQQ. I think the SPY was at 0 and the QQQ was at 3 at the end of last week. So those numbers total obviously 3, and it was the lowest we've ever had in the Prospero signals. We're going to cover some of the hedging strategies that if you had been doing over the past month or so, really would have helped out your portfolio a lot. And some of the things that George has mentioned on the stream, things that the Prospero signals have led us to thought were good hedges. After that, we're going to cover CoreWeave, which went public last Friday. Do we have anybody in here in the stream already that bought the CoreWeave IPO? It was a tough one for CoreWeave. It was supposed to go public at around $48 per share. I think the final price it wound up going public was $40 per share, and then it really did nothing. I think it ended the day just below that price, but barely moved after that. So is this a sign of a lessening of interest in the AI growth area of the market? CoreWeave is very linked with NVIDIA. NVIDIA is the largest shareholder. So a little bit of a soft spot, looks like, for AI. Obviously, tough market to IPO in. So cover all of that good stuff. And then Apple hit with a $162 million fine by French regulators for abusing mobile advertising power. We've covered how maybe the big tech companies can be the targets of overseas European regulators because of the tariff impacts. Maybe that's their way to get back. So is this a sign of things to come? 162 million. I mean, Apple's a $3 trillion company, but 162 million is a lot for anybody. So how does it look with these companies being in the target? Also, we're going to cover another Mag 7 stock, Microsoft. Stanley Druckenmiller recently sold out of his entire Microsoft position, and he added a different company, which is now his 8th largest holding. You'll have to stick around until we discuss the story to see which stock he added. Here's a hint. It is the Amazon of another country overseas. So that should narrow it down for you guys who know your stocks around the world. Like I said, we're going to cover Bitcoin, and that'll lead us into fintech because we've had a lot of fintech companies. Let's take a look how they're doing today. Pull back pretty severely, maybe even more so than the overall markets. See George is entering the stream. Hello, George. Welcome in here today.
I'm just getting some tea. I'll be right back.
Sounds good. So let's take a look. Let's see. PayPal down 1.5% today, but down 25% year to date. SoFi down 24% year to date. Square, then Block, now XYZ, down 37% year to date. And last but not least, let's take a look at Robinhood. Robinhood's the only green one, up 6%. So how does fintech look? And all of those 4 companies, is anyone our favorite in our signals versus the others? Then we'll get into XAI acquiring X in an all-stock deal. The combination of these companies is now valued at over $110 billion. I'll let you know how the breakdown is between each of those two when we get to it later on. We'll cover the universe of Elon Musk, which, day by day, there's never a dull moment. And then last but not least, at the end of the stream, before we turn it over to the model portfolio update at the end of the stream today, and obviously we're having a lot of volatility in the markets. Signals are changing quickly. You're going to want to watch that at the end to see what we do. But before we do that, we'll get into Amazon and their latest updates with their AI. They have one curated for shopping and one for their health side of their business. So we'll talk about both of those AI launches for Amazon. And then also Amazon's acquisition of One Health, or One Medical, I should say, which was for $3.9 billion in 2022. Does that look like it's on the path to becoming one of the greatest acquisitions of all time? And if not, what acquisitions are in that place now? But without further ado, let's get into what we're seeing in the markets overall today. George, we had a big red opening today, kind of being bought up a tad bit, nothing super strong so far. But after the market plummeted at open, kind of finding its way early this morning, we have this April 2nd date that's been mentioned for a month now, just upon us on Wednesday of this week. I'm seeing some people cover the April 2nd date as saying it's going to be a clearing event, where they expect that there's been so much uncertainty and so much bad news priced into the market now that no matter what happens, investors will just be happy to have this date behind them, have a little bit of certainty. So how are you feeling about this April 2nd date? Do you think the market will react one way or the other, or is it all priced in now and just the overall markets opening up today after the weekend?
I mean, I'm not that confident in that, just because there's a lot of talk of like retaliatory tariffs. And even if all of these US tariffs are baked in and some retaliatory tariffs might be baked in, like we don't know exactly what the retaliatory tariffs would be. So I think it's very hard to say it's all priced in. Like, I think you can fully price in like an earnings beat, right? If everybody's expecting them to beat or whatever, of course it would have to move. But I don't think you can fully price in like kind of like an international relations event around tariffs that's pretty unprecedented. I don't think you can be like, oh yeah, all that's in already, when you don't even know who might react to what, and then what those kind of derivative reactions will be. I don't buy that at all. It's certainly possible. It's certainly possible, especially if like these are the tariffs are applied as expected, or maybe some are even reduced, and there's no kind of retaliatory tariffs, new ones announced tomorrow. Then yeah, it could go well. But I being confident that will go well, I don't know about that.
And that opinion that you're giving of the markets, where it's like, I would say maybe slightly more bearish than even most people, does that come from the Prospero signals, where we saw the lowest reading ever, I believe, of QQQ and SPY combination of their net option sentiments? Is that how you're like building your opinion based off the things you're seeing in Prospero?
Some of that, but I mean, I could see people just being defensive with that. Like, I don't think QQQ and SPY and option sentiment being so low necessarily means people are sure it'll go badly, or they're just worried, right? People could aggressively hedge into this without it necessarily meaning they expect tomorrow to make it worse, right? It could just be defending their positions. But yeah, the overall very low QQQ, SPY, and then option sentiment, and that kind of like that extremely low, like lowest we've ever seen rating together, it's not good. I mean, we did see QQQ net option sentiment, interestingly enough, hit 57 this morning, but then it went back down to 0. So I think like I don't think I've ever seen a move that big, and the only thing that really explains it is there's a lot of swing trading, a lot of bots moving prices around, trying to assess the stability in the market.
Could you give any more of the background of how the net option sentiment could move from like 57 to 0 in that quick of a time? I think people are probably confused as to how like such a big swing could happen and be like reversed so quickly. Could you provide any like insights into that? And maybe it'll help people out in understanding the signals a little bit more.
Yeah, I mean, like we always say, it's either it's there's supply and demand function. So it could be that all of a sudden there's more people there's more people that want to swing trade something upwards in the QQQ. It could mean that people are, I mean, what I would say is the most likely looking at that is that like some big places, maybe simultaneously very, very close to each other, closed out certain profitable hedges and they're looking for some different ones. Um, a reason that they might do that is, let's say you're shorting the QQQ and it's already gone, or you have puts on the QQQ and it's already gone down a decent amount. So your puts are either, your puts are like, deeper in the money now. Out of the money puts are always going to be more profitable. So if you're still really confident the market's going to go down, you actually might want to cycle out of those in the money puts into out of the money puts. You might do that you might do that relatively quickly. You might get out and then want to see the market action before you get back in. But I would say cycling into new positions is what I would, based on that. Um, oh, there you go. Someone used it. Someone used it for a quick move up. But yeah, it's definitely something that there's no one way to look at that big of a move, and it's probably a confluence of things. But if I had to guess the biggest culprit for that, that would be it, cycling out of some new positions into other ones, or just swing trading. But if it was swing trading, what we'd more likely to see is something that didn't go all the way down to 0 to 1, right? It might go like 57 to 20 to 40. It would yo-yo a little bit more if I thought that was the case.
And I think we also wanted to discuss some of the hedging strategies that we've recommended. And I think the way you're talking, is still bearish, kind of like how we saw the QQQ net option sentiment go right back down. I guess they're still hedging too. But some of the strategies that people, if they had in place, probably would have performed better with this market pullback and maybe going forward even from here.
Yeah, I mean, I think that a lot of people have pretty, and right now especially you have to be really opportunistic. We're trying to be opportunistic. I'm sure that's how a lot of funds are thinking. That's really the only thing that um that you're doing if you're smart, because the way, I mean, even just look at last week, right? Last week we had some really solid numbers on Monday, and I think a bit of Tuesday, and then they just like fell off the cliff.
So I wanted to bring up this CoreWeave IPO that happened last Friday. It was being hyped up in the morning as, a winner of this AI cycle that we're going through right now. I believe their largest investor is Nvidia, and they're very linked to Nvidia. They actually used to be a like Bitcoin mining company that has transformed into this AI infrastructure company. But their IPO underpriced, so they wanted to go public in like the high 40s, and it finally went public at 40 per share. So one question right there, like how bad of it is a sign when a company can't even meet the demand pre-IPO or like as they're trying to go IPO. Now today they're trading at 36, so down 10% from when they were going public. Um, Overall, is this a bad sign for the AI narrative hype cycle that, this is supposedly one of the winners of the AI growth phase and industry that we're in now, now down 10% and underperforming, having a lackluster IPO? Or is it just like the overall market? Obviously, it's a very weak market as well.
I think there's a few things at play here. I think the first thing that's at play is it's just a bad time for growth, right? And that's what all of these, like, the way GPU companies are, a lot of AI is priced right now, is obviously priced for growth, right? So a lot of that and how they were doing the IPO and making comps, right? When you do an IPO, you're making comps, and the way these companies are currently valued are going to be, there's still a good amount of growth. Like the market, a lot of people, that's why Buffett's on the sidelines, kind of thought, the market's overpriced, right? And and a lot of what they're saying is you're paying too much for future growth when they call it overpriced. I mean, sometimes it is about like more mature companies on current earnings, but frequently when people are talking about overvalued companies, they're talking about overvaluing growth, right? And looking at CoreWeave, there's a lot of future speculation in that. So I think the first thing is it's just like a bad time to be a growth company and asking for people to pay for growth, especially if you're not like, say Nvidia, right? I feel like if people decided they had growth appetite again, or something like AppLovin, those are like easier names to drift to than a new company, less proven as a stock, less proven to have a retail market, which obviously doesn't help you as an IPO if you don't have that excitement versus these other stocks that kind of have heavy retail followings. And the second the market starts going up, what do people start talking about buying again? They start buying Nvidia. They start buying, things like AppLovin. They talk about how they think Tesla's undervalued and is going to turn around, right? So I think all that is working against it. And then you also have the fact, then we're talking about it a lot, but it really can't be understated how much I think the narrative is shifting to China being more competitive with the US on innovation. And I think some of the dollars flowing these growth companies, these AI companies, is the perception that China might offer cheaper products, but in terms of quality on tech, the US is going to be the presumptive favorite. But I think China has changed the narrative a bit on that, and that's going to hurt valuations in addition to the macro effects of just the overall economy.
You mentioned how Buffett's been sitting out of the market or going more to cash, and I'm wondering if you think throughout this year at some point we'll see him make not an acquisition, a buy or an investment in one company, like one Mag 7 company, or maybe even several that he's never had before. And at what point would some of these prices look interesting? It's actually interesting that Apple is green now when I just pulled it up, but like Amazon now down at 185, Meta at 560 after it was just over 700, Microsoft under 370. The list goes on. Would you expect him to like eventually, or would it not surprise you if this year eventually he made some investments in big tech?
No, I don't think he's going to. I think until this macroeconomic situation is gonna work out, because look at it this way, right? I'm not sure. I mean, and I'd probably say Buffett did not see, Trump winning, all this tariff stuff. Like, I'm not sure he was going that far ahead when he went to cash, right? He went to cash because he thought the market was overvalued, right? That's his playbook. But kind of macroeconomic problems that weren't factoring into that current calculation that are now, you could say, make the valuations even lower for him, because he doesn't really like macroeconomic risks. I think that's why we saw him, make that investment in, that expand his investment in Japan, right? They're not a very, they have very conservative economic policies. Although they did, they're starting to sell more U.S. debt, which is not great for us. A lot of people are starting to do that, and that's pretty inflammatory for them. But I also think it's just like a practical retaliation. Anyway, I think he's really like, I think for him, unless the market gets really beat up quickly and this macroeconomic tariff situation, whenever it gets more settled, I don't think he's gonna be any hurry to get back in. And the truth of the matter is, I think the more that we're looking at this, like people are starting to dig in, right? We're mentioning with like debt sales, all this retaliatory tariffs. This is not looking like the story where it did perhaps at the beginning of the tariffs, where Trump said he was going to do tariffs, and then he got some concessions and from Mexico and Canada, and then you could say like, oh, maybe this whole thing's just going to blow over. Maybe he just wanted to get a few concessions. It doesn't really look like the world is in a big concessions mood anymore. But B, it's like when you start talking about like these retaliatory tariffs and maybe us raising them even more, that's the kind of thing that could make this a pretty long trade war, which is why I'm saying that part for Buffett. Like, even if the market did lose another 20 or 30%, I think he'd probably want to see this like resolved and our economy more like stabilized and in good trade relations to the people around us before he'd start putting a lot of money into the US again.
And you were talking about how maybe the world isn't ready to bend the knee anymore. We saw a story about Apple, which is honestly why I was surprised to see them up out of all the Mag 7 stocks today. Hit with a $162 million fine by French regulators for abusing advertising power on mobile from 2021 to 2023. We've kind of hinted at this before about how big tech maybe could be in the target if overseas or European nations want to kind of retaliate to the tariffs. Maybe they'll find the big tech companies. Maybe that's the leverage that they have. It's interesting that Apple's not really responding at all to this. What do you make of this story and these events?
I think when we look at things like this, I think we were kind of talking about the story before Trump took office, and I think I think when we talked about this story, I think it was more places like the EU getting annoyed with US tech companies, more US tech companies than the government, right? Now that they might be annoyed with both US tech companies and the US government, we could see like these tech companies taking a lot more of the brunt than they might have otherwise taken if there were better relations with the EU. And I think that's particularly scary because whatever the EU does could potentially be copied by other countries, especially like we're looking at right now. If like other countries are kind of piling on and maybe selling US debt, buying gold, doing things like that, might they also be wanting to punish US companies if the EU gives them a roadmap on exactly how to do that and how they can execute and how to use international courts to do so. Now, I don't know what kind of courts, if they're doing that domestically or they're using international courts or whatever, but especially if they're using international courts to do it, that could just be a blueprint that other countries could follow. And yeah, I mean, I think this is why we're seeing all-time low QQQ, SPY, net option sentiment, because certainly as long as I've been alive and longer, the US has done some unpopular international relations things, right? But overall, the US has kind of been like there at the center, good relations with most Western nations, at least decent relations with a lot of Asian nations, a lot of South, like, the US does, up until this point, has not really done a lot to piss off, a lot of people at the same time around the world, which it looks like they are now. So it's very hard to look at the stock market and say, well, what does this mean for the US stock market? What does this mean for US companies? Because you can look at it a few ways, right? You could look at it like, oh, like the US has had a bit of a strained relationship with China for a bit, right? Yet we all still buy these little Timu or whatever, we still buy those products, right? So you can say there's things outside of commerce and international relations that people are willing to do. But the flip side is people in the US buy that because it's, cheap, right? The things the US produces aren't necessarily cheap, I mean, they do go more for quality, kind of like we're talking about with like Nvidia chips. But it's very hard, even just talking about this Apple story, right? It's very hard to say like, oh, will we maybe see more, regulatory actions against other, things outside of just consumer discretionary goods? Will we see it more in tech? Will we see it more in other places? Will this, trade war escalate to a lot of different kinds of areas? I don't think anybody knows the answer. And I think a lot of people are wondering and a little fearful around that. So I think that is what's causing all of this apprehension and downward pressure on the market.
So follow up to all of that. So it seems like the two major risks, concerns, fears, worries are, um, global tensions. So businesses that are very international, that's going to affect them, and then obviously tariffs raising the cost of goods. So wouldn't companies then that are smaller cap and maybe their business is entirely like or almost entirely within the U.S be almost unaffected or just the least affected by this stuff. And then also companies that are like tech, but they're selling software or services that aren't really don't have any reason for like the physical supply chain of international stuff. Tariffs won't really impact them. Can those companies be the leaders out when these tariffs are in place, and then also like the Russell, maybe it's underperformed for so long because globalization made all these large companies, you know, be better businesses than these small caps. Is that going to reverse because of this?
Well, I think the base of what you're saying, that like businesses that are primarily or almost all domestic, um, might have a much easier time in this. But keep in mind, part of this is that consumer confidence is low, right? So domestic, international, whatever, like maybe on the international side, there's an argument that could say that tariffs are placed, but still people want to buy your goods, right? It's not necessarily like people are going to stop buying your goods. Versus in America, if people are just spending less money, that means kind of in a vacuum, all goods are being bought less. So we don't know that. And the other thing that I would say is like one of the most important things that the stock market does to businesses is it provides growth capital, right? It provides growth capital at higher prices. If the American economy is suppressed, right? Even if you don't, even if like all of these foreign countries and people in them don't really know much about the small cap stocks in the US, if they're say buying the IWM, right? That is driving up the price of mid smaller cap stocks in the IWM, right? That price is making the business more valuable. It's making it easier to raise money, easier to expand, right? So businesses are not just about people buying goods. It's also about how people are capitalizing their companies. And if companies are not having as easy access to capital because their valuations are lower, if it's just that their valuations are lower, but they can still access capital, but they're just not growing as efficiently. These are all things that even outside of the purchasing of their products, could be affected by what's going on with the American stock market, the perception around it, and how international relations is kind of affecting demand for the U.S. stock market.
And it would seem as though one of the goats, Stanley Druckenmiller, is in a similar line of thinking as you and Buffett. So it came out that he recently sold his entire stake in Microsoft, which I feel like we haven't really talked about Microsoft a lot recently. So it's good. We'll maybe get a little update on them. But then he also added Mercado Libre, which is now his eighth largest position. Now, I recently heard something, I forget where I heard it, but that Stanley Druckenmiller has never had a red year as an investor in the public eye in the market. I don't know. I haven't verified that. I was wondering if you knew if that was true or not, but I know he's one of the goats. His name is thrown around all the time. So when he makes moves, I think people listen, kind of like Steve Cohen, maybe.
I mean, I certainly believe it, but I haven't verified the stat on my own, so I can't speak to it. Um, but yeah, I think it is a good time to be looking internationally, right? I just think it's like when you talk about all of the things that we're talking about, and we always talk about this with tech stocks. We say like the problem with a tech stock and why value investors didn't used to invest in them is that you don't know how much of the growth is built into the price, right? And here we're dealing with a different problem. We're dealing with the fact that we don't really know how much economic and international economic stock problems, all the things we're talking about, is already built in the price. We're like right back to where we started about the tariffs, right? And where it is difficult to know how much growth is built into a tech stock, at least what you're dealing with is known assumptions around it, right? You're basically saying like, okay, like how fast is it expected to grow? Do I think they're going to grow faster? How much do I think the market is pricing this relative to other stocks in a similar thing, right? When you're dealing with problems like we're talking about, where we're not even in control, right? Like there's total outside factors, right? A company is going to give you their roadmap, right? And you can plan around that. It's not going to be precise. You're not going to have access to all information, but they're, trying to do it. They're giving you a plan. In a lot of cases, they're giving you their 3-4 year plan. They're having it laid out. They're laying out costs. Like we don't really know what that is. And part of the reason we don't know, even if the Trump administration did happen, some of it is what we're talking about is that we don't know how tariffs will be reacted to, retaliatory things. So that's what's making this market so hard, right? You can't even really properly grok at how to make the forecasts.
Bob just shared a stat in the comments. Approximately 50% of all consumer spending is accounted for by the top 10% of earners in the United States. Meanwhile, the 90% of the bottom have had their savings systematically depleted due to inflation. Is that a scary stat that 10% of people account for 50% of the spending?
Yeah, I mean, and don't forget about all of the consumer debt, right? There's all that like savings have been depleted and consumer credit, consumer debt is going through the roof. So yeah, I mean, if there's one thing you can look at by the US over the decades is that there definitely has been some class warfare going on. And when you look at this stuff, you really wonder why the level of greed that it was. Like why, like I get that it's just like it's nobody in particular is responsible for it, but you'd think that people like looked around throughout history and saw that like, when you kind of are systematically unfair over, decades, so not hundreds of years, it eventually catches up with you. And it really doesn't make any sense why we pursued these policies and we could be such a wealthy country but not even like pay for people's health care like other developed countries do. It's really mind-boggling.
Well, now I'm thinking about like if 10% of the people do 50% of the spending, and those 10% are the people that basically have a lot of their wealth in assets like the stock market, and now that's pulling back. If it pulls back 20, 30%, what's that going to do to their spending? As the government is cutting spending, cutting jobs, seems like, um, I don't know, the recession probability is like fairly high, I would say.
There's a lot of things happening right now that all seem to be like concerning events mounting together. Some of them, like we're talking about, like the stagflation thing. Um, it's really hard to see. I hope there's a plan um, to turn all this into some kind of long-term benefit, but I haven't heard anyone explain to me what it could be that really makes sense. Like right now, this all just looks like a lot of problems that we didn't necessarily need to have.
Now, we've talked about a lot of the negatives, so I always like to kind of balance it all out. If all of these negative scenarios actually do come true for the most part, is this setting up for maybe like a year of negativity in the stock market, and then you'll have very good numbers to compare it against in 2026, and you could see a nice bull market in 2026, even if 2025 is a pretty tough market, because then your growth numbers are going to be probably easy to beat next year, I would think, going forward after you cycle through all this stuff.
Well, it really depends, right? It depends if, like, that's why I'm saying we need, like, if things keep escalating, right? And there's tariffs and there's retaliatory tariffs, and it's hard to really say where the bottom is or where the curve is, right? I think that's one of the tough things where, when we talk about Tesla now, I'm just like, yeah, like, it's probably a good value here if we've seen the bottom of the sales boycott, right? And people are going to start buying them again, or it's going to wear off, or there's going to be new customers or whatever, right? If we're kind of seeing the bottom of the decline. But A, I'm not sure we've seen it. And B, like, part of understanding how big that could get is also understanding, like, the same thing we're talking about here, right? If the whole trade war escalates, he continues to have a prominent position in Doge. People kind of like, there's a lot of people, not just in the US, that could be affected by the trade war, right? And, like, let's say you're in a country that you feel is affected by a trade war started in the United States, right? You're probably more inclined, like, and there's not really anything you can do to the Trump administration on a day-to-day basis, right? What's the easiest way to get back that people are using right now? That's why Musk is facing the brunt of it, because he seems to be the easiest target to get back at for people that I think just are generally unhappy with how the U.S. Is behaving, and it's hard to know where the bottom of that is, or the top, or whatever analogy you're using. It's hard to know when we don't know how much further this escalates.
So I wanted to bring up Bitcoin on the stream today, up 2.5%. Do you find that surprising as the market opened up so weak today and we got right across the board that Bitcoin is able to be holding up in this market so far? And I want to spin into a little bit of fintech after this, but hitting on crypto first.
Yeah, I mean, I have kind of been interested in the fact that it does seem like on a lot of days, like, Bitcoin and the S&P 500 have been moving in the same direction. I'm glad to see a bit of a break here, because, like, it's not necessarily something that I would expect those assets to just go in the same way. And I mean, it's very hard to say, like, what is a value, what is, like, in, especially when you're dealing with Bitcoin, that, like, a lot of the value is esoteric and momentum, right? But I think if you're looking at, like, where the S&P 500 is compared to the all-time high versus where Bitcoin is, and also Bitcoin is more of like a future growth thing, you could say it's priced more attractively. Like, I don't really like to get, like, those valuations are very hard to do. But just looking at on, like, two simple, very reductive couple points, just on that basis, you can say that Bitcoin is a better value. And then I think it kind of goes back to, like, it seems like a long time ago when the whole Trump administration was going to be a bull run and there was the Trump trade. But uh, when you're looking at um, it still, you could say, well, I know we've lost some luster and everything, and maybe this isn't going to be a bull run again. But, maybe people are saying that, like, well, in a situation where a lot of assets can be depressed, we still think Trump, likes Bitcoin. There's talk of him running for a third term now. Maybe he doesn't want to lose all of his Bitcoin bros, and so he'll have to actually, like, do something to keep it elevated, even if other assets. So I think that is to say, like, assuming that the whole thing, all this stuff doesn't just crater, or maybe that he doesn't, maybe that Trump will actually do something to support his Bitcoin bros. It does seem a bit safer than the general market, which is not something that I would expected to find myself saying.
I feel like Bitcoin is kind of caught between two paths right now. It's like on one hand, it kind of trades like a growth tech stock, but then on the other hand, there's a lot of people who think of it as like a digital gold, and obviously we've seen gold kind of rip recently. So maybe Bitcoin's kind of waddling back and forth between those two paths of like which way is it gonna. Those investors are fighting over which path it's going to take. I see Bob commented again in our chat about the idea that we're bringing a lot of this manufacturing back to the US because of the theft of intellectual property. Any thoughts on that?
Um, I don't like. I don't really agree with the way it's been done. If like if Trump wanted to bring manufacturing back to the US, the right way to do all of this would have been to first subsidize the manufacturing industry, get it built up into a place where we could take on more capacity, and then do the tariffs, right? You can't just like spin up manufacturing facilities. Um, it takes a bit, and it doesn't make any sense to launch aggressive tariffs when you don't even have the manufacturing capacity domestically to replace all the stuff you're trying to tariff. That has been my biggest problem with this from the start. That like I think tariffs and a lot of use cases for tariffs are based on having better manufacturing in your country, which we don't have very good manufacturing in the US, and are not really making any efforts. Like, even now that they're passed, I don't see any like manufacturing stimulus bills or anything talking about that. Like, to me, that's what should have been done at least alongside. There should have at least been a plan for that. But there isn't. And that kind of really cuts into the benefits that we can get from this.
So we talked about the surprising strength in Bitcoin. I wanted to go into fintech after that because I feel like there's been maybe on the other end surprising weakness. But I guess with all the problems with the consumers, maybe it's not that surprising. So to bring up a few, SoFi down 24% this year, PayPal down 25%, Square down 37%, and then our favorite, Robinhood, is actually the only one that's green. Robinhood's up 6% this year. Do you have any thoughts on the fintech space as a whole? I remember in the early parts of this year, it seemed like financials were going to do very well, but I guess the banks and the fintech stocks are a little different. So, do you separate those two and the financial space, fintech, uh, as a whole?
Yeah, that seems like a long time ago now. I think one of the things that really was affecting that um, was that I think there was a lot of retail enthusiasm behind these like retail interaction things, and one of the things that we recommend um, to any basic value investor is like, hey, use a product. You use SoFi as your broker. You use Robinhood. Then it's a good stock to own. And I think a lot of people do that connection, and that's solid value investing. But I think that can really turn against you, right? I think if you start to perform poorly in your portfolio, you could say, oh, well, all investors are going to struggle. I'm really close to this, and these things are going to go down, right? I don't want to own Square. Less people are going to buy Bitcoin. Bitcoin's down. So it can kind of teeter both ways. And I think that's kind of a rising tide lifts all ship things. I think when retail traders, investors are doing well, all of those things are going to do well. Their valuations are going to get propped up, but it can very much go the other way when people start to struggle. And I think that's what we're looking at.
And it seemed like for so long the complaint about these companies were that they traded at high valuations because they were like, I guess a lot of people were excited about the growth aspect of them. But now you have PayPal trading at a 16 PE. Let's see if SoFi is profitable. SoFi has a 30 PE. Square has a 12 PE. So they're kind of like relatively cheap, I guess. So they're priced a
Yeah,
lot
those are
lower.
crazy. Those are crazy valuations for PayPal and Square. All right, like
It,
let's see. Like I'm just curious. Like where's Robinhood?
I feel like the way they're valued, it's almost like the market's expecting their earnings to drop almost. Like they don't trust the valuations.
Yeah. Oh, definitely, without a doubt. Which might not be far off based on what we're talking about.
Hmm.
Huh. Where is this? Yeah, that's crazy. Robinhood's at 53 and compared to those. I'm curious about Goldman Sachs.
Imagine if the big
Yeah,
banks.
that's
Uh,
crazy. Like PayPal and Square they're trading at a lower PE than Goldman.
that's shocking. So, like, what does that mean to you when you see that?
It means what you said. It
Uh,
means that people don't think those earnings are gonna hold up. And you know, it is, in better economic times, you can get away with higher fees, right? In worse economic times, not only are there going to be like less assets, people are going to do different things with their money. Um, maybe they do things like start paying down debt instead of leaving things in checking or investments or things like that. Um, but then um, you also kind of have a pressure to lower fees that hurt your margins and hurt your earnings. Um, and I think that yeah, if you look at um, even just I used to pay some people at PayPal, and like they have those like pretty. If you use a card, um, it's more, or there's always these like little fees, and then meanwhile, my bank, I can wire people for free, right? So that's something where I've just started to wire more people because it's like, oh, actually, my bank is not charging me a fee, but PayPal is charging me a fee. Like that's the kind of thing that I think people get a lot more sensitive to. And yeah, when you have competitive products like banks, like these neobanks that are offering free wires, it can change the economics.
so I just added a link for the Prospero new Reddit channel in our chat. So we've had over 1,200 people in here today. Thank you all for tuning in. We're posting some content in a new Reddit forum. So you can click that link and join there if you want to go check it out. We have one more story to get into today. But before that, let me just tell you all if you have any comments, any things you want us to cover before we wrap up this last topic and turn it over to the model portfolio, just feel free to let us know. Um, but what we'll get to now is XAI buying X. So, in an all stock deal, XAI has acquired X for $33 billion. XAI is valued at $80 billion, so a total of $113 billion. Does this valuation surprise you at all? And how do you think about this move? You think it's a good idea combining these two companies? If I'm being honest, I didn't know they were separated to begin with. I thought they were kind of together already, but what do you make of this move?
Yeah, I mean, I'm not entirely sure like what is in XAI. I mean, I think that's pretty intentional. But like the one thing that I think about in XAI is like all those emails exchanged between like OpenAI and Elon Musk and how he wanted like to acquire OpenAI, and then during that he said nobody's going to catch Google, and now it's really funny because like Google is like lost a lot of its luster in AI. But I mean, I don't know. These are like, and I think you always have to wonder what kind of deal is being made when someone's basically like selling a company to themselves. Um, but yeah, that's a lot of like investors are putting in at that valuation. But I mean, who's to say? Nobody really knows yet, like who the winner in AI is going to be, and that's because like we don't really we don't really even know the real products. Like as far as I'm concerned, like Chat GPT, all these things are just like they're kind of like they're saving a little time. They're kind of like parlor tricks, though, at this point for people. Like there's a lot of cool engineering, don't get me wrong. But like writing something that you could write anyway, that it just writes quicker, like building a presentation or a picture. Like a lot of it doesn't, like none of it yet is anything that you could be like, oh, like a company would like pay a lot of money for that. There's just like these efficiency benefits. So, could XAI come out with like a major innovation that like every company needed and they would pay like $10,000 a license for? Yeah, a lot of AI companies could do that. So it's hard to say, where the real value is. But one thing I will say, one of the most important parts, one of the most important things for an AI is a training set, right? And X has one of the better training sets out there, along with the other social media companies. That's why they can build such good AIs. But in places like Amazon. But yeah, I think that it's gonna be very interesting to see, and then it's gonna be interesting to see, for better or worse. Maybe this is actually helpful to us in the long run. It'll be interesting to see if the government starts to interact with XAI. In the same way that everybody says like TikTok has like institutional grade AI, and that's why like the video or like government institutional grade AI, and that's why the video recs are so good. Maybe there'll start to be some interaction between the U.S. government and X. I don't think that's particularly fair to the other U.S. AI companies, but from a perspective of like, hey, the U.S. has got to compete with other nations however we can, especially now if everybody's going to hate us. That might be something that could be good for us in the end.
By the way, you said recently, I think maybe even last week, like, isn't the TikTok deadline coming up soon? I've heard nothing about it. Like, there was all that drama, and now it just seems like nobody's talking about it. I feel like in the past week, when I get a YouTube ad, I wonder if any of our viewers have had this experience. Every single ad is a TikTok ad explaining like how they are good for like family businesses or small startups. Like every single ad I get, I swear to God, is this TikTok. So they're really hammering that point. So I'm wondering if that's going to be like the narrative and like how this all comes out in recent days or weeks.
Interesting. Yeah. Yeah, like maybe they paid off all the US tech companies and the US government, and it's like you could stay here. You just have to buy our ads and share some data. Who knows? Wow. And yeah, if people were just trying to start to drive traffic to our Reddit page, so we would really appreciate the follow on that page. We're it's good because like we're doing a lot of different content there. Like we're doing some video, we're doing some longer form writing, some shorter form writing. It's kind of a mix of all the rest of our social media channels.
I feel like it's the blend of everything. Like if you like writing, you like video, you get a little sprinkle of each in the Reddit.
Yeah.
Trump last week said he could extend the deadline, said Bob for TikTok. Okay. So maybe it won't be resolved soon.
Well, yeah,
Um,
whatever it is, like my observation to you was just like I like it seemed to have gone away
yeah,
mostly.
there's just no coverage about it. I forgot we do have this one Amazon story, but I feel like we've had like a lot of great topics, so maybe we should just can this one for next week or Wednesday again and save it, keep it in the bank.
Yeah, that's fine.
Okay, so we'll do the switch over now. Everybody, stick around. George will be tuning back in the Prospero lab, and we'll do the model portfolio update. Let me make myself big. Okay, I am the show now. All right, so let's take a look at the Prospero net option sentiment for the SPY and the QQQ. It looks like the market is continuing to edge upwards throughout the day. The QQQ is now just down 1%, and I believe it was down over 2% at its lows. The Dow is up 1/3%, SPY is down 1/3%, and the Russell is now down just under 1%. So everything is kind of drifting on upwards today. The VIX, after spiking this morning, almost hitting 25, now down at 2250, only up 3% on the day. So things are kind of calming down, it seems like. Let's see if there's any change in the SPY or QQQ in Prospero. My phone is telling me server error. Are any of you guys watching getting that in Prospero? It's not letting me check the our signals. Let's see if I refresh it, if it'll work. Interesting. I'm getting a server error in Prospero. Let's see if QQQ works. I've only tried SPY. Oh, Jonathan, you're seeing the same thing as well? Unable to search for stocks in Prospero? All right, we'll have to let George know. We're getting some errors. Trace Gatos, QQQ is at 10. It's working for Trace. Can you give us SPY as well, if you have a moment or a chance? I would assume it's at 0 if QQQ is still that low, but we'll see. SPY is at 15. Interesting. Very, very interesting. Let's see if there's been any changes in any of the Mag 7 stocks. If any other have gone green in the meantime. Join the Apple Club. Actually, we haven't looked at Nvidia at all. Nvidia, wow, Nvidia is getting close to that $100 price point at 105. Nvidia is red. Let's see some of the other big tech. Apple is green and going greener, now over 220. Meta's on the verge of going green. It's down 1% still though. Amazon fighting back higher. Jill, you're getting the error too? We'll see what George has to say when he gets in here. If you have it saved, you can see, okay, so you just can't search for it. Google almost went green, still in the red though. Very interesting day across the board. The markets are mixed. Wonder, did we retest the low in the QQQ and the SPY and bounce? Oh no, we're actually lower than the low of March 13th now. In the QQQ we're lower, and in the SPY we retested and bounced so far, so interesting. Definitely wasn't good to see a rejection at the 200-day moving average for the markets. That's kind of the signal, I guess, for this most recent drop. 10 and 15. Oh, so you're seeing it too, Jill? All right, George. So thankfully, we have some friends that have updated me, but I don't know why. When I look up SPY and QQQ and Prospero, there's a server error, but they're at 10 and 15 respectively now. Trace Gatos, let us know.
Unable to search for stocks in Prospero? Yeah, it works for me. Yeah, I get it too. Yeah, I'm searching right now. It works. Well, let's see if you don't mind like taking a video of what happens and send it to me email or whatever, like that's what we kind of need to do. But for now, I will do the letter. All right, so we're at, well, I'll do that at the end because it's moving so fast, actually.
It's happening on my phone, so I just screen recorded it. I'll text it to you so you can see it.
Let's see. Let me close it and then reopen it and see. Oh yeah, now it's happening with me. Oh, now internet. You can see me, right?
Yep, we got you.
Okay, let's do this letter.
Mario said he needs to go, but good conversation today. Thank you, Mario. Thanks for being here.
I am going to, we'll work on fixing that in a second. Okay, here we go. We're going to get to QQQ and SPY at the end because it's been so crazy.
The dip for large cap growth is widening. We have already divested a lot here, but we'll look for momentum score to see how much more aggressive to be. We may look to balance out risk by looking for bears in the small cap area. Which is the weakest when you combine value and growth. Technology and consumer discretionary are now far and away the worst sectors one day in 3 months. Could that make for a potential rebound opportunity? Yes. So we don't want to get too concentrated on shorts here. Real estate, consumer defensive, and energy are all looking good, like good places to go long as uncertainty amounts.
I don't know why this happens, but. Okay. I think we added that. Oh, did we see any real estate here? Yeah. 47. I like this. Oh, I think we'll do both. All right. This is not our traditional ads. A utility company to real estate and healthcare.
The times they are changing.
All right. That looks good. Looks good. All right. What's our QQQ and SPY net option sentiment?
I can't see it in my app, but Jill commented that QQQ is 11 and SPY is 15.
It's not.
Oh, I actually can see SPY now, not QQQ though.
Oh, you searched?
No, it doesn't work. It's in my bookmarks. I didn't realize I had it bookmarked.
Oh no, wait.
All right. Any last questions?
Let's see.
Nope.
Anybody? No new questions. We had a great stream today, I think. Thank you all for tuning in. Hopefully you enjoyed. Best of luck to you in the markets over the next 48 hours until we're back here live covering it all for you. Wednesday, 3 p.m. See everybody there. Thank you, George. Thanks, everyone.